heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, all eyes on Powell. Markets on edge, and we watch the tech sector ahead of the Fed.
Plus, Microsoft and BlackRock are teaming up, planning to launch a $30 billion AI investment fund.
And Google wins in court this time. EU judges overturning the company's €1.5 billion antitrust fine. But first, let's check in on these markets. Abigail Doolittle.
Well, Caroline, we are just hours away from one of the most anticipated Fed decisions in years because, of course, it's all but likely that they will, in fact, cut at this next meeting for the first time in 4 years. But the big question is, will it be 25 basis points or 50 basis points? According to probability within the Bloomberg terminal, right now we are looking at a 57% chance of a 50 basis point cut. This would be one of the first times this has happened in a non-emergency capacity, perhaps raising questions of what are they seeing? Why are they going to make such a big cut if it happens? Not so long ago, former St. Louis Fed President James Bullard did tell CNBC he thinks the chances of a 50 basis point cut is actually overblown. So we have seen this probability come in about 5% since those comments at the highs on Monday at 70%. But the main point is more than 50%. What has this done for stocks? Well, over the last couple of months, since we have seen some of the sectors, in particular technology, peak, we have that magnificent 7 in the bottom panel of this chart that we're looking at, down about 5%, whereas you have some of the rate-sensitive sectors, utilities, real estate, staples, healthcare, defensive sectors doing better because their dividends will look less attractive. That is not the case, though, since the Fed started hiking. Let's take a look at technology. Since that time period, it is clearly the top sector, up 60%. In fact, all of the sectors a nice rally, except for real estate. Higher rates, of course, lower the values on real estate. So that is the one lone sector over the last 2 years that has done poorly. And then finally, Ed, this is mind-blowing in a way. NVIDIA, over the last 2 years, since that Fed hiking cycle had started, up more than 770%. We have the likes of Meta up nearly 300%. Microsoft and Apple, not to be left out, both up about 50%, 75%. Big rally for tech. But more recently, as we've had this rotation into other sectors, tech cooling off. But you can see those investors over the last couple of years doing quite well.
Bloomberg's Abigail Doolittle, thank you. Let's keep the discussion going with Megan Horniman, CIO of Vidence Capital Advisors. And we start by asking, how significant is today's Fed decision for the technology sector?
I think it's definitely very important for the tech sector as well as the entire market. I think that if the yields keep moving higher, as we've seen here as of late, then that's negative for technology. And technology is rallying on the anticipation that we're going to get 50 basis points from the Fed today. If that doesn't occur, I think that that's going to put this rally in technology at risk.
There is a part of the Mag 7 story, Megan, where those names are performing in isolation of everything else that's happening in our world because of the commitment to invest in the infrastructure supporting AI. How closely tied are the two stories, that and central bank policy?
Well, I think central bank policy and then the story around technology, they're separate things. The infrastructure with technology, the advancements that we're going to see, this is going to evolve over time. But the valuations that you're seeing on these stocks is linked to interest rate policy and as well as yields. If this interest rate policy does not deliver with what these heightened valuations are anticipating, then you're going to see some valuation correction in these names.
Is that limited to the big caps or more broadly across technology in and of itself, Megan?
I think it's broadly across technology and even some of the communication services, any of these growth type of names that you've seen with these very high valuations. These high valuations are pricing in perfection. They're pricing in that the Fed will come in, deliver with these interest rate cuts. They'll come in, save the day like we've been used to over the past couple decades. And they're also pricing in perfection for the economy. These things, none of this is set in stone right now. So I think that there's a big risk here for some of these growth and high PE level tech sectors.
Is that just in the US, or do we see the wind taken out of the sails of European tech too, Megan?
Well, we don't have as much technology in some of the European indices. They're not as tech heavy as the U.S. is, but we have seen the correlation here when we have the sell-off in the growth or technology here in the U.S. It does tend to filter into overseas as well.
Megan, how important to you and the technology investor around the world is the path forward thereafter? We can't help ourselves, right? We've been waiting for September 18th, and we already ask, then what increments will we have further rate cuts in the path from there?
Right. And that's a great question because they can do several things today at this meeting. They can deliver with 25 basis points, which is what I think that they should do. They should reiterate that they're going to continue to monitor data. They'll act accordingly. It's meeting by meeting. And then if they go with 50 basis points, they could come in and say, this is a fine tuning. We're going to be on hold now. And then you're going to get the cuts that are priced into the market for the rest of this year move out. The most important thing today, whether it's technology or the rest of the stock market, is what are they going to say from the dot plots going forward? What are they saying for the unemployment, their estimates that they're going to have to put out? What are they saying as far as inflation? Because let's keep in mind, inflation has come down significantly, but it's still in certain areas is very sticky. So their press conference and the projections that they put out after the meeting, they're more important, obviously, in fact, to us, than whether it's 25 or 50 basis points today.
Megan, there's whole other parts of the capital structure you can own within technology. What does this mean for the debt, corporate debt of Apple, of some of the names that have just so much cash on the balance sheet as well? Do bond markets feel the pressure in the same way that the equity side will?
I think bond markets do. They will feel the same way. I mean, let's be honest, the yields have come down quite a bit. They're backing up a little bit now, but yields have come down substantially. And then when you look at the longer term over yields and whether you're looking at long-term debt, there's just this focus on treasuries. There's a major issue from the treasury side of things that is the deficit. And there's not been anything to address that. And I don't see even with an election coming up that there's anything that's going to change that, the amount of issuance on that long end of the curve. So anybody who's focusing on debt or is debt heavy, and I realize the technology sector is not as debt heavy as other sectors, going to have an impact on these long end of the yield curve.
Megan, I'd like to end the conversation by trying to learn from the year that's gone about what might happen in the year ahead. And I use NVIDIA as the case study, capital expenditures and investment. But the other phenomenon that's happened is retail investors have piled into NVIDIA as well. How does a change in interest rate environment just kind of change the fanfare of the market and the psychology of the market over the next 12 months?
Well, it all comes down to what is the price of those stocks. And when you look at stocks that have very high elevated price to earnings multiples, we saw what happened in 2022. If interest rates rise across the board, and then you see those high PE level stocks, and that's technology specifically, they end up getting hurt by this. So going into next year, I still think the Fed has the flexibility to continue to cut rates. I just don't think that they're going to deliver the way that the market is pricing this in right now.
Verdant CIO, Megan Horniman, it's great to have you today. We thank you. Look, what's interesting about these markets is perhaps you wish you had the investment vice or decision-making prowess of, well, the investing elite, Ed. Think Warren Buffett, think Stanley Druckenmiller, think David Tepper, and so many more. Today, we understand an ETF is trying to promise just that sort of power of AI. Fintech startup Intelligent Alpha, they're launching a chatbot powered by ChatGPT, Gemini, Claude. They call them the investment committee. They're going to act like these hedge fund aficionados to make decisions. What do you think?
We know the obsession of the market of those names, but what I find astonishing about the story is the simplicity of it. That basically it's a strategy generated through a generative AI tool. You listed them, but you just go into it and ask, what's the strategy here? What would Warren Buffett do? And you get a response.
And then the ETF trades off it. I don't know if we'll see how this one plays out, but it's an interesting launch today. Meanwhile, coming up, we've got so much more to talk about. And of course, there's a serious side to what's happening in terms of geopolitics, and it affects technology because pagers and telecom devices are exploding in Lebanon. More on the developing situation next. This is Bloomberg Technology.
An update from Lebanon. More pagers and other telecommunication devices exploding in Lebanon just one day after a series of similar deadly blasts. That's according to reporting by the state-run national news agency. Bloomberg Television's Jumana Basetchi joins us with the latest. What do we know about the events of the last hour and what's happening in Lebanon, Jumana?
That's right. So it appears that another attack on Hezbollah's telecommunication devices has occurred just in the last hour. We are hearing of handheld radios, walkie-talkie devices, again, also exploding in people's hands, cars, and across homes even. And this, of course, comes after yesterday's attack where more than 2,000 pagers went off simultaneously, exploding into the pagers that these Hezbollah operatives have been using. Now, it is important to note here that Israel has declined to take or has not commented on any of the attacks that have taken place or the incidents, but both Hezbollah and the Lebanese government were quick to point the finger at Israel, saying that Israeli intelligence would have been behind this very elaborate operation. But what is clear here is that this war that has been going on, a hot war, so to speak, ever since October 7 on Israel's northern border, has developed and transformed into a new type of warfare, a cyber warfare, and lots of questions are being asked about how these specific devices have been compromised.
Can you tell us a little bit about the supply chain ultimately here, Jumana, of what you say is an elaborate attack? The Taiwanese company Gold Apollo has spoken out.
Yes, so the branding on the pagers that were detonated yesterday can be pointed back to a very not well-known Taiwanese manufacturer called Gold Apollo, and they actually issued a statement saying that those particular models that were used for detonations yesterday were not ones that they manufactured themselves. Instead, it was actually a company called BAC that were based in Hungary that had obtained the licensing to use the branding on devices that they manufactured. Now, Bloomberg did try to reach out to BAC for comments. We have not heard back from them. But again, all of this is part and parcel of a very elaborate plan, and it seems to be the case that it's not just the pagers that were compromised, but other telecommunication devices that Hezbollah militants have been using. And experts in the field say that the way this could have been done is by whoever tampered with the devices putting in small quantities of explosive device, say explosive material, 10 to 20 grams, that would get triggered on a signal that would come through so that they would all explode simultaneously. The country is on high alert because this is the second such intelligence breach in 2 days.
There are several parties involved and we're awaiting responses from others, but my understanding is that Lebanon and Hezbollah, which is a group the United States denounces as a terrorist group, have accused Israel of being behind the attack. We haven't heard from Israel. What else do we know about the political situation, Jumana?
Yes, well, again, it is fast moving. And as I was just highlighting, within Lebanon now, there's major concern that we're moving to a new type of warfare, and that in the past, the war had been conducted solely on the southern part of the country and borders. But now what's happening is there's been a complete intelligence breach. People are very concerned about what this means for telecommunications within the country and the potential for further action or further operations coming out of Israel. The background to this, of course, is yesterday the Israeli Prime Minister Benjamin Netanyahu said that there is another new war objective now, and that is to return security to the northern border of Israel so that citizens within the country can return back. They had been evacuated and had been forced to move displaced ever since October 7. And so there is a focus from Israel and from the Israeli government to do something about the situation on that border. The concern, of course, is that in the absence of a diplomatic solution, we may be looking at something like a full-scale invasion.
Risk of a serious, dramatic escalation is what the United Nations is currently saying. Jumana Basetchi, we thank you so much for coming to us from the Middle East. Meanwhile, coming up, we'll be joined by Creatio CEO Catherine Kostareva for her company's take on AI-powered CRM. This is Bloomberg Technology. It it's time for today's AI in action. We're bringing in Catherine Kostareva. She is the CEO of Creatio. It's a no-code platform enabling the automation of workflows and CRM thanks to the power of artificial intelligence. Just announced $200 million in new funding over the summer. You've got a $1.2 billion valuation. The value of what you provide is, well, less engineers and coders needed. I can build my own application using just Creatio.
So true. And first of all, thank you very much for having me. I'm excited to be here today with you. And you know what, when we founded the company 10 years ago, the biggest value we brought to our clients was time to value, ability to build your applications, not being a professional software developer. And right now we're doing that with the help of AI, and that's definitely the future.
In the world of technology, I think we still ask ourselves about disruption versus what the incumbents are doing. And I've spent a lot of time with Salesforce and speaking to Salesforce executives, and they would tell you, Catherine, they're doing exactly the same thing. How do you respond to that?
Oh, love the question. So let's start with the evolution of coding, right? If we go back into 80s, it was high coding. You basically couldn't build the application not being a professional software developer. And then low code came. It's like rapid application development industry. And then no code emerged. So what Creatio is doing different from our competitors is actually giving the ability to design your applications, not being a professional software developer, which and not being in tech industry at all, which actually allows time to value, time to market to be significantly faster. With the help of AI, you not only develop your own apps and automate multiple use cases, you actually replace people in multiple different roles, like case resolutions, like sales management, like campaign management. And in comparison to Salesforce, the biggest difference at Creatio is that you build those intents, you build those use cases, not being a technical person. So you define the use cases where AI is helping you to automate tasks without being a professional developer on the Creatio platform.
You said replace people. And for many, that is the key worry around artificial intelligence. Most people try to say they'll be augmented. Have you known that your clients have replaced people?
I love looking at it through augmentation, right? We actually empower our end users to do their job better.
But you said replace people. So have people been replaced at your clients, do you think?
Partially, yes. Like if we talk about call center, like people are doing more intelligent work. So replaced in a very good way, because basically AI is taking over routine tasks while more intelligent work is being done by people. Like let me give you an example with building workflows, building your own applications with the help of AI. AI does this work for you while you do more intelligent work, which is integration of workflow applications into the ecosystem of your organization. So it does require more skills, which is a benefit for workers because they can grow in their professional skills.
We want to thank you for bringing the pros, the cons, and indeed what you're building with Creatio and your valuation. CEO Catherine Kostareva, thank you very much indeed. Now, shifting to another part of AI, BlackRock and Microsoft, they are teaming up on one of the largest efforts to date to bankroll the build-out of data warehouses and energy infrastructure behind the boom in artificial intelligence. This, of course, being a enormous undertaking from an infrastructure perspective. And we want to be digging into some of the intricacies around this particular deal that has been struck between an enormous asset manager, and indeed Larry Fink was posting on various platforms yesterday, Ed, all about how much that they are seeing this whole seismic shift in the need for artificial intelligence, the sheer scale of money needed, but actually he seemed to think it was relatively easy to come by. Lynn Doan, I'm pleased to say, joins us for more. Lynn, this is a massive amount of money and expertise coming from NVIDIA too.
It is, and thank you for having me. It sounds massive, doesn't it? $30 billion sounds massive. But it's just the tip of the iceberg. I mean, remember that even before this $30 billion fund was announced, Microsoft had already signed a multi-billion-dollar contract with Brookfield just to build some renewable energy plants that would in turn supply the electricity for data centers that are necessary for AI. And before this announcement, we had this scoop on how Sam Altman, the head of OpenAI, was working on his own plan for AI infrastructure and pushing for it here in the US that would have also cost tens of billions of dollars. So we are, in the end, talking about hundreds of billions of dollars of AI infrastructure necessary to keep the boom happening. And this is just the latest announcement.
Exactly so. When I read the story by Bloomberg's Scilla Brush and Dina Bass, it's all the same names, really, that we've been talking about. What's different a little bit about the BlackRock and Microsoft initiative, Lynn, seems to be there is a more micro focus on energy, but also deploying capital outside of the US as well.
That's right. And that is actually something that has been a big part of Sam Altman's push, too, has been going out there abroad, trying to attract foreign sources of money to fuel this AI boom. It was very interesting to see the Abu Dhabi fund invested in this, but also, as you said, the energy part of it is the critical part. And when our very own Brad Stone interviewed Sam Altman at Davos a year ago, he said something very similar. He said, I don't think that the world has yet realized how big of an increase we are talking about in energy demands because of the AI boom. By our estimates at Bloomberg Intelligence, we're talking about possibly 10 times more energy being put toward AI data centers by 2030 than today's levels. So for sure, the focus needs to be on the energy aspect of the equation.
Just briefly, we know that people were at the administration at the White House last week talking about AI infrastructure. Is this the fruits of those labor?
That's right. And I mean, I don't know if this fund is the fruits of those labors, but for sure what came out of those conversations, as far as we know from sources, was an agreement for a task force that would look at these issues together. And I think that a part of that will be looking at all of the permitting and the regulatory hurdles that need to be cleared in order for these massive power plants and data centers to even be for one to even fathom them being built in the US, just in terms of like the environmental permits and the space.
Bloomberg's Lynn Duan, thank you very much. Now, coming up here on Bloomberg Technology, how Google won its court battle over a nearly $2 billion fine from the European Union. That discussion coming up next. This is Bloomberg Technology.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
The day is here, Ed. Fed Day, 2 p.m. Will we get a rate cut to the tune of 25 or 50 basis points? That is what the market weighs and watches for. And we currently just tread water, basically, on the NASDAQ 100. We're off by 0.1%. Now, there is some concerns, the risk aversion building as to what it means for technology once we get those rate cuts. Let's move on and look at the individual movers, because actually, on the higher side, we have got Apple powering higher today, and it is the biggest lift from a points perspective. We're up 1.7%. So all eyes on those Mag 7 names and where they can continue to run in the way that we've been so used to, even with a hiking cycle. We're looking at, for you, Ed, Ubisoft. I do Star Wars Outlaws. There's been a lot of worries about this new game. And actually, for once, we've got BMO analysts there saying it is so cheap now, this French name of maker of course, the latest games, that we got to be buying in. It jumps more than 6%. Remember, it's down about 50% year to date, though. And I'm looking at Alphabet, just treading water, also ahead of the Fed. But there's been some interesting micro news. Yes, there's the YouTube Creators event happening right here in New York and some unveilings there. But there's a key event that happened earlier in Europe, and you got the details.
Yep, Google won a court fight with the European Union over a $1.7 billion fine for illegally stopping rivals from placing ads on third-party websites. The court cited key mistakes in the original 2019 Pro. Bloomberg's Sam Stolten joins us from Brussels. So this is a positive outcome for Google. Explain the basics of the court's decision.
Yeah, so it is actually quite a rare win for Google in the European Union's courts here. It's important to say this is a win in the lower tier court. That's the EU General Court in Luxembourg. So the decision can actually be appealed to the European Court of Justice, which is the bloc's highest court. Now, effectively, this $1.7 billion fine was slapped on Google in 2019 after EU antitrust chief Margrethe Vestager said that it was illegally preventing rival search engines run by the likes of Yahoo and Microsoft from placing ads on websites like online newspapers, travel platforms, and blogs, etc. But now, of course, that $1.7 billion fine has been struck out by EU judges who, as you've just said, cited a number of errors in the Commission's investigations, including in their definitions of certain things like market definition and the duration of the alleged abusive behaviour.
Yeah, I mean, Google itself, funnily enough, saying they're pleased with this response. They said it really factored on a very narrow subset of text-only search ads, and basically they'd gone back and changed the contracts from 2016. But this isn't the only focus on ad tech and its power within that space, not just in Europe, but also in the US.
Yeah, indeed. So you have two parallel, I suppose, fronts really on Google's advertising technology business. So the case today was really more about display advertising. But when it comes to advertising technologies, there's a much more, if you like, existential risk to Google's long-term sustainability in these types of markets. You have the Department of Justice case that's obviously embroiled in legal proceedings at the moment, but also in the European Union, they have their own investigation open into Google's advertising technologies, which we assume could lead to an eventual breakup order, potentially in the coming months. That's an investigation that still needs to be concluded, but the European Commission is certainly making progress on what would be its fourth investigation into Google's business and potential abuses of dominance.
Sam Stolten, we thank you so much on all things EU versus big tech. Let's talk about what's happening on the Hill and big tech, because tech firms will be the focus of a US Senate Intelligence Committee hearing on election threats. Executives from the likes of Google, but also Microsoft and Meta, are all set to appear. Bloomberg's Jackie Davalos joins us from DC with more. Who are we expecting to hear from today, Jackie?
Well, while everyone's tuning into the Fed decision, I'm going to be on Capitol Hill at that Senate Intelligence Committee hearing. And we're expected to see executives like Google's Kent Walker, Meta's Nick Clegg, and Microsoft's President Brad Smith. And really what the focus here today will be, what is the role and responsibility of tech companies in detecting misinformation and disinformation online, particularly as it relates to foreign interference in our elections. And this has been a key focus for this bipartisan panel. It's chaired by a Democrat, Mark Warner from Virginia, and the vice chair is Marco Rubio from Florida. This is an issue that both sides of the aisle care about. And what they want to understand is, what have companies been doing to fulfill their commitments to detect this kind of interference in elections online? Now, just yesterday, very timely, Microsoft published a detailed report that showed that Russia was actually spreading phony videos online that were targeting Vice President Kamala Harris's campaign. And this is just kind of the type of report that you've seen some tech companies come out and publish and say, this is what we're seeing from our end of things. OpenAI in May also released a similar report that says they detected some foreign interference from actors like China, Iran, and Israel in trying to change political discourse around the world. Now, OpenAI won't be present at the hearing today, but this is the kind of report and action that senators want to hear, that companies are proactively doing to prevent this kind of disinformation from proliferating.
What the US voter, Bloomberg technology audience member, might ask is, well, hold on, it's less than 2 months until the election. So is this great Senate hearing with these technology executives going to have a focus or an impact on the upcoming presidential election? Or is the idea it's bigger picture, the integrity of our elections longer term, Jackie?
Both, Ed, and that's exactly right. I think Russia is such a focus for this committee on both sides of the aisle. They've clearly been trying to sway U.S. elections even before this upcoming one in November. But what you're saying exactly, it's this integrity, our institution and people's ability to believe that what they see online is actually true. Now, we don't have a lot of time before the election, but as you know, things spread so quickly online, especially in this new age of generative AI. And so whatever they can to do to at least put the spotlight on companies so they can proactively move and detect and prevent this kind of stuff from making it onto our phones in a second. I mean, it's an effort, but will it be effective is yet to be seen.
Taylor Swift has had rather a lot to say about it of late. Bloomberg's Jackie Davalos, we thank you. And what have we got coming up?
Some more news headlines from around the world. It's time for Talking Tech. First up, Amazon named Samir Kumar as its new head of consumer business in India starting October 1st. Kumar joined Amazon in 1999 and also leads the consumer businesses for the Middle East, South Africa and Turkey. Plus, JP Morgan's in discussions with Apple to take over their credit card portfolio from Goldman Sachs. JP Morgan among a slew of credit card issuers that have looked to take over the Apple Card, which launched with Goldman 5 years ago and is now seeking to look elsewhere. And hackers behind a cyber attack of drug distributor Cencora were paid $75 million. That's according to sources. The payment was made in 3 installments in Bitcoin and is the largest known cyber extortion payment ever made. Caroline.
Wow. Coming up, 23andMe's entire board, it's a special purpose board, just quit in protest of the CEO's plans to take the company private. Details next. This is Bloomberg Technology. We're watching shares of 23andMe actually rebounding after, all of them, independent board members, resigned yesterday, protesting CEO Anne Wojcicki's plan to take the company private. And the directors said that there hasn't been any notable progress on presenting a proposal. Bloomberg's Liana Baker has more on this. I mean, it's only up 2% and it has been under pressure. This is extraordinary. It was a special committee to analyse whether or not a deal would look good, and clearly they're voting with their feet.
So it's an interesting situation, and Anne Wojcicki actually controls the company. She controls the vote. So it's all up to her what happens. But a special committee did form, and they've been waiting for a fully financed offer to come in, and that just hasn't happened yet. So it seems like they're frustrated. And some of these big Silicon Valley names are on the board, like Sequoia's Roelof Botha has resigned, and others. So we'll see what happens. But Anne Wojcicki does still want to take the company private, and really the ball's in her court because she has control of the situation.
It's $180 million less than market cap company, trading at 35 cents a share, nowhere near its $17.65 peak. Doesn't seem that hard. I mean, what do we know about the financing package? Who's going to be getting involved in the take private, Liana?
At this point, we don't know who would be involved, but we know that Wojcicki has bid 40 cents a share, which is above where the stock is trading, although it is sort of a penny stock. You might remember that this company went public through a SPAC deal, and it did have high-profile backers before, like Richard Branson and other big names. But at that point, it was worth several billion. Now it's just a fraction of that, and we'll see. For now, the special committee has a banker. We're not aware if the company itself is exploring a sale, but Wojcicki has said she is open to other offers. So it could make sense for this company, out of the limelight of the public markets, to sort of reset and potentially restructure to return to growth.
Bloomberg's Liana Baker, who leads our deals team. Thank you very much. Let's get to some more news. KKR and Goldman-backed home renovation startup LiveSpace is getting closer to going public. The platform connects customers with designers for home makeovers in markets like India and Singapore. It expects its first net income in the first quarter of 2025. LiveSpace gets 85% of its revenue from that India market. Caro.
Let's talk about someone who's probably eyeing the IPO market and indeed the venture landscape. Someone with a lot of expertise. Mike Gregoire is with us, Brighton Park Capital partner, co-founder. Just made a recent $250 million investment, for example, in the ticketing marketplace, TickPick. And you have significant expertise having run big tech businesses yourself, Mike. What do you think of the IPO landscape? Are we going to rev back up post-election?
You know, I think it's a strange environment where in order to go public now, I think there's a bigger burden for quality. And I think that there's so many companies that have, gotten to Rule of 40. They're proven that they can manage customers. If they're SaaS companies, they've been through several renewal cycles. I think that we're going to see a lot of companies, running out to an IPO. And there's a lot of investors that are looking for liquidity. So the pressure between the companies being stronger, proven, as well as, investors looking for liquidity, I think you're going to see a number of IPOs come out in the new year.
Rule of 40 being annual revenue growth rate, profit margin being at least 40%. So looking strong and resilient. Where then do you make your bets in the very early stages? We just talked about how you assigning money to TickPick to be able to take on the likes of SeatGeek and other areas to buy tickets to real life events. Where else looks appetizing right now, Mike?
I think you have to have a philosophy and a thesis of where you want to invest in. You definitely don't want to be investing in what's happened in the past or incremental solutions to legacy systems. You want to be into difficult, high IP, hard problems to solve. And when you take a look at that, the areas that we think are super exciting is anything to do with AI and being on the place of AI where we're trying to help companies solve bigger problems that have never been solved before, or adding massive value to problems that currently exist, but doing it better, faster, cheaper. We have a handful of investments that we've done along those ways. You take a look at a company we have, CoreLogics. It started off as a logs company, and they've added 3 net new products that are massive TAMs. Silverfort in the identity management space. If there's anything that you want to be paying attention to right now is zero trust and identity management. And when you take a look at how Silverfort solved that problem, they've done it in a way nobody else has ever been able to do it before. They can solve, multi-factor authentication. So the same thing that irritates us all, where you put in your password and they send you a text message, you could never do that for service accounts or for on-premise systems. And Silverfort has absolutely unique technology to be able to do that nobody else really has. So you want to be thinking of those types of things. How do you build a big company when you start with a company that's just got one product?
Having a focus on cybersecurity is not unique, Mike. We have loads of people on this show that say it's ripe for disruption, but it seems like a crowded field to me.
You're 100% correct. I see 2 or 3 things happening in cybersecurity. Everybody's moving to this concept of XDR, and the whole notion is we've been actually pretty good at detecting. We haven't been great at responding. And we have 4 million people in the cybersecurity world right now that have experience in cybersecurity. We need 8 million. There's no way we're going to be able to get 4 million more people that are highly qualified in cybersecurity. So it's going to have to come through automation. And I think AI is play a significant role in making that happen.
Mike, real quick, because I can't resist. What's it like being on a cap table with Rory McIlroy?
Well, Rory's first of all, he's an absolute gentleman, and he's actually a very good investor. And, it's nice to have a celebrity like that, especially a quality person of his nature associated with your firm.
Mike Gregoire of Brighton Park Capital, really good to have you on the program. Thank you. Now, coming up here on Bloomberg Technology, the new race to the moon is on. What's next? This is Bloomberg Technology.
And liftoff of the first United Launch Alliance Vulcan rocket, launching a new era in spaceflight to the moon and beyond.
It's been more than 50 years since an astronaut last walked on the moon, but this decade could see a number of countries attempt to send humans back. So who's in the race and why now? Bloomberg's Tom Gibson has more. Listen to this.
America plans to send 4 astronauts into lunar orbit, including the first woman and first person of color as part of the Artemis program. This will set the stage for the next Artemis mission, to have people on the moon in the next few years. But while Neil Armstrong only spent a few hours on the moon, the Artemis astronauts will be there for much longer, spending at least 6 days on the lunar surface. China also hopes to have people on the moon by 2030.
我们坚信，中国空间科学的春天已经到来。
And has achieved a series of impressive firsts. It was the first and so far only nation to land on the far side of the moon, and the first to send samples from there back to Earth.
Going to the far side of the moon is especially hard, of course. It never actually faces Earth, and so communicating with anything on the far side of the moon is really, really hard.
All this has America worried.
I don't want China to get to the South Pole first with humans and then say, this is ours, stay out.
Bill Nelson, the NASA administrator, has frequently referred to China's policies here on Earth, in particular the South China Sea, where China has said, all these islands in the South China Sea, they belong to us. Bill Nelson has said in the same way that they did this grab in the South China Sea, there's potential that they would try to do something on the moon, and so we have to make sure to stop that.
You can catch the full episode at Bloomberg.com. Now, let's get back to the tech markets, because today, or here on Earth, is Fed Decision Day. Bloomberg's Sonali Basak. Look, you're looking across assets, as you do on your show, day in, day out, but we want to shine a lens on what's happening with technology within the implications of the bond market, for example.
Absolutely. Let's take a look at what's just happened to the 2-year, for example, over the past month and what it's meant for technology stocks. And if there's been a relationship, the 2-year over the past month has drastically fallen in terms of the yield movement here, more than 40 basis points if you could take a look at that. You are down now to 365, with the market expecting that the Fed would cut 50 basis points today. Of course, you have economists more in disagreement there, but with that pricing moves, let's flip up the board and see what the S&P and the NASDAQ have done over that time frame as well. And in fact, you have the NASDAQ outperforming, or the S&P 500 rather, outperforming the NASDAQ 100, but the S&P 500 really rising marginally and the NASDAQ flat to lower. If you flip up the board one more time here, because this is where you actually see that move much more distinctly, the S&P equal weighted index, which had reached a record yesterday, is up more than 3% over that same time frame. This is really paying more attention to those companies outside of tech in a more equal way, with the Mag 7 down 1.7%. Even with that yield movement being so drastic on the move lower, this Philadelphia Semiconductor Index down 5.6%, almost 5.7%. And only a handful of stocks really in the green over that time frame. So what does that say? At the beginning of the year, when people had thought that a lower discount rate would really fuel these tech stocks, that has not happened in the past month. So what you really need then is a new narrative that is based on earnings, that is based on that AI payout, and not as related to interest rates as we had expected in the past, Caroline.
Sonali, I looked up from my desk this morning, massive TV screen, Bloomberg Open Interest, the show that you anchor. 4 words, Fed Day is here, banner across the screen. How palpable is the excitement, tension, anxiety of all the investors you have on your show, particularly those that are focused on tech?
Listen, it's fascinating because on one hand, the AI story has dominated this market, has it not? And you felt that excitement to shift away, actually, for a moment this morning, Ed, away from that story about interest rates and towards that tech story, because it is still driving so much of the market. I think about what Kate Moore over at BlackRock said, and this idea that perhaps people are taking the chips off the table right now. They could be taking the chips off for a little bit longer, but that doesn't take away from today. The idea that we are on the precipice of a historic rate cutting cycle, 25 or 50 at the end of the day could cause some volatility, but the rate and the path forward is what really matters at the end of the day, complicated even more by an election in November.
Sonali Basak, we thank you so much for talking us through it all. That does it for this edition of Bloomberg Technology. But look, as we expect that momentous decision, we're not doing all that much in the NASDAQ 100. We're off by 0.3%, a little bit of anxiety, Ed.
I think that's what the market's called treading water. Anxiety, but we're very excited. A lot's recapping the show away from the Fed. Recap the podcast. You know where to find it on the Bloomberg platforms, on Apple, Spotify, and iHeart. Big thanks to the team out in New York City. Big thank you to everyone here in SF. This is Bloomberg Technology.